Hey guys, welcome back to another video from Father and Son Investing, the channel that wants you to get the young people in your life investing. Speaking of a young person in my life, my son is the 18-year-old pitcher that I've told you about before, baseball pitcher. He went 7 innings yesterday, so a complete game for high school. I gave up 3 hits, 1 walk, no runs, and he struck out at least 3 that I can remember. He ended up with a lot of ground balls and fly balls getting hit, which is the perfect thing a pitcher wants. Fantastic outing for him. Now today we're going to talk about Clover Health. I'm very interested in Clover Health. I own some of its stock, and I think that they have a very good opportunity. There are 10,000 people a year in the United States joining the Medicare ranks. So Clover should stand to get a decent size of that 10,000, especially as they expand out into multiple states. Something happened with Clover stock today. It went way up. At one point, it was up just about $10 a share, which is right around 35% on the day. What happened? What was driving that? Well, we need to cover short selling and the concept of a short squeeze. I know a lot of you will already be aware of how this functions, but remember that there are people on this channel who are young investors and they might not be aware of this. So I'm going to cover that concept. Please bear with me. I'll try to do it very quickly. This is a graphic that comes from USA Today that really simplifies this concept. The broker, those are the people who keep track of the stocks or sell stocks, broker dealers, they are going to share a stock with a borrower. They're not going to sell it, they're going to share it. They're going to loan it to them, essentially. The borrower then is going to sell that share of stock out on the open market. Now, a short seller expects that the price of a stock will decrease such that they will be able to buy the stock back at a cheaper price. So how does this work? Say they borrow it when it's $10 per share. They sell it out on the open market for $10. They now have $10. They're going to buy it back at a cheaper price, say $5 per share, and they return that stock to the broker. And in the meantime, they still have $5. So that's how they're going to make money shorting a stock. Now, just for transparency, I'll tell you that I am not into shorting stocks. I buy stocks because I expect companies to do well and for their share price to appreciate over time, not because I'm interested in trying to short them and make money that way. But I understand there are a lot of people who do it. It is a risk if you're going to short stocks. Your losses potentially are up to infinity, depending on how high a stock wants to run. Obviously, that's not real, but a stock can run very high, and that creates something potentially called a short squeeze, where someone shorting a stock can lose a lot of money. Let's say that a stock normally sells between $10 and $5 a share over a cycle. So if this top part of the gray is 10 and the bottom part is 5. And here we have the stock just kind of cycling. It's doing within its normal trading zone. And somebody decides that they're going to short the stock. So they buy it at 10, expecting it to go down to 5. Now, let's say some of those sellers don't repurchase the shares at $5. Maybe they think the price will go lower and thus they could make more money. But instead, the price starts climbing. Now, as this price gets back to their original $10 and then goes beyond, well, some of those short sellers are going to start to get a little nervous because now they're losing money potentially. So that brings in the concept of the percent float, the percent share float. So let's talk about that. What is a share float? Well, simply the float is the number of shares of a stock that are available to the public. Some shares are not going to be available to the public. They may be locked away in the hands of company insiders or employees or institutional investors, where those shares are generally not readily available to the public for purchase. That brings us to the percent then of share float. So this from Investopedia: if XYZ Corporation has 50 million shares and 5 million of the shares are in the hands of management and other insiders, and 5 million of the shares are in the hands of institutions, well, then there's 40 million shares that are readily available to the public, and that is an 80% floating stock. So if there are 100 shares readily available to the public, but there are 144 shares that have been shorted, well, then we have more short than there is readily available, the float, right? So then we start to get to the percent short of float. Now, Clover Health is sitting right at 144% short of float. That is a very big number. This is the top 8 that we have here in the U.S. market. The next one, Publimatic, is only at 50.2% short of float. And the third one is another company that I like, OnTrack, is at 43.4% short of float. So Clover is almost 3 times its next publicly traded company in terms of short of float. Going back then to our short squeeze graphic, as this price starts to rise, the people who have shorted the stock are going to be very eager to buy them. Only if they're not available or there are more shorted than the float, then that price is going to climb drastically because it's supply and demand. As that price continues to climb, more and more people can get caught up. Say some people shorted this at 10, well, they might not be that worried, but other people may have shorted it at 5 and they're more worried. But as the price gets to 15, well, now we might have some people who shorted at that price as well, and so on and so on and so on. All right, so there we go, the short squeeze. So that essentially was what was happening with Clover stock price today with that high percent of float number. It got all the way up to about $10 again. That was right around 35% increase, and we're looking at about almost 19% now on the day, which is fantastic. But the price is only back to $8.74. There's a lot of us out there who had shares that were purchased at that $15. I have some that are purchased there, and I have some that are purchased down around 7 or 8. Certainly take advantage of when the stock price goes down. Now, certainly it could have been another catalyst as well that drove the stock price up. I don't think it was nearly as much as what the percent short float there was. But let's talk about what the other catalyst was. So yesterday, Clover added a new board member. It was a big win for them. The person's name is Dimitrios. I'm not going to try to say his last name because I know I won't say it right. I actually tried Googling videos for his name to hear other people pronounce it, but we're just going to call him Dimitrios. Now, he was recently a top Medicare official at the Centers for Medicare and Medicaid Services, that's otherwise known as CMS. And that was during President Trump's tenure, but he also was executive or had a leadership role in the Department of Health and Human Services, otherwise known as HHS, during the George W. Bush era. And additionally, he was a general counsel at United Health Group, so he has a lot of experience within this arena. How big of a win was this? Well, a former colleague of his at United Health Group said that he is a strategic thinker and a real get. And somebody else, a former HHS official, had this to say: Dimitrios joining the board is a game changer for the company. He's forgotten more about Medicare than most people in this town know. He adds instant credibility to anything he is associated with. So this addition to the board was, again, a real win for Clover, and I think that's a catalyst, but nowhere near what the percent share of float was in terms of creating that mini stock increase in Clover's price. Now the question is, where do we think the price of Clover is going from here? Honestly, I don't know. It all depends on whether the retail investor crowd over at Reddit gets involved with this and decides to drive this up even more. Of course, we have to wait over the weekend for all of this, so it's a little frustrating instead of being able to just watch this go again tomorrow. Will it end up like Rocket, where it was just 1 or 2 days, or will it end up like GameStop? Hard to say. I think that'll be some of the fun to watch this over the weekend and see what sort of buzz there is. And what do I think this stock is worth? I think it's still in the $15 range, $15 to $17 to $20. If this stock gets up to $30 or $40, I'm going to sell my shares because I think it's coming back down to right around $10 where it's been sitting. Might as well take some profit and repurchase it again at $10. Enjoy your weekend. If you liked this video, please give us a thumbs up. That is really important to YouTube's algorithm. And we'd love to have you as a subscriber. Until next time, enjoy your investing.